What's up, everybody? Good morning. It is very weird for me to be live with you in the morning, but trying something different, and we'll see if it sticks. If you guys are enjoying the stream or you're enjoying me going live in the morning, make sure you hit that thumbs up on your way in the door. But welcome to Own the Chaos. The stock market is crazy and chaotic, and I made it my mission to help you guys own it, doing some things, shaking some things up within Own the Chaos. If you guys haven't seen some changes already, well, get ready because it's going to happen. We're going to see a lot of things moving and shaking here in this channel itself. Doing some merging with some old friends, and it's going to be a lot of fun as well. So just a collaboration, I guess, if you will. I'm also doing something different in the mornings as far as channel members are concerned. In the afternoon, you can chat as much as you want, whether you're a member or not. In the mornings, it's going to be exclusive to my loyal following, which is the Chaos Crew members. There's a lot of you that have been in here forever, and so I figured I would give you guys the privilege of being able to chat in the morning if you so choose to do so. If you guys want to join the Chaos Crew, make sure you hit that join button next to subscribe in the channel, in the stream. And I can't wait to have you guys hanging out with me this morning. I also put a poll in here about the S&P 500. You saw the title. The stock market is going nowhere for the rest of the year. That is according to Goldman Sachs. We'll talk about that and as to whether or not I think they are spot on, or they might be slightly off, or completely off entirely. So stay tuned for that. We also have reactions that I'm going to give to Tyson Foods, Cummins, as well as onsemi. Those all reported earnings already this morning, so we're going to be talking about that as well. But looking at the overall market, I mean, it's red, but it isn't all that bad. You have the S&P that's down around 33 points. Dow's down 192. NASDAQ is down now 1%. So it's accelerating its sell-off a little bit going into the open. Crude oil, though, has started to move up. And this is something that I actually had talked about within my Stockwatch Sunday, my KS Crew Stockwatch Sunday people. If you want to go check that out, every week Sunday, on Sundays before the market, before futures end up going out, I actually talk about the stocks to watch. So go check us out over at patreon.com/ownthechaos. All kinds of goodies in there, as well as discords, charts, my stock picks, that sort of thing. So go check it out. It's $5 a month. You can't beat it. Crude oil, WTI crude is at $74 a barrel. And then also looking at Bitcoin, that's down 1.5 points. So, red start to the morning, but we'll see how this day shakes out. Obviously, anything can happen. And oftentimes we see this shakeout in the market and things continue to move up. As I'd mentioned, the S&P before this morning was up over 7% for the year. So year to date, since the first of the year. So in the last month, essentially, we've seen a 7% rise in the S&P 500, which is kind of crazy. And then you have the S&P, or you have Goldman Sachs coming in and talking about how this is not sustainable, which I agree. It's not sustainable, but that the market's not going anywhere for the rest of the year. That's something that I'm not quite sure I agree with. So get this. Goldman Sachs says that the stock market won't grow much in 2023. They believe that the good part of the market is already over and that stocks won't grow much this year. The chief U.S. equity strategist, David Kostin of Goldman Sachs, thinks that the stocks might not grow because of rising interest rates and that earnings are not likely to grow a lot either. He thinks that other investments like non-U.S. stocks, credit, and cash might be the better options. Cash is probably better now than it was this time last year when inflation was 8%, but it's still not great in my opinion. The stock market has already done well this year, but many experts are worried because big companies like Apple, who missed earnings for the first time in 7 years, and Starbucks haven't done well as expected in their earnings. They also think that the Federal Reserve's recent interest rates might slow down the economy and hurt other stocks. Another expert, Wei Li from BlackRock, says the stock market is priced for everything to go up perfectly. There's no reasons for stocks to keep going. I think that there is some truth to this. And some of you, this is very interesting. A lot of you guys have put in to the poll that I put on here. And I asked you guys, where do you think this ends up by year's end? Where do you think the S&P 500 ends up by the end of the year? Now, historically, on average, the S&P returns around 10 to 11% per year. Obviously, we see red years and green years. Some years are better than others. Last year, we saw the S&P was red on the year. And so I think that with it being up 7%, if we're going to go by the law of averages, S&P has some room to run still. I think that there is a possibility that it actually goes up to 15 to 20%. And one of the big reasons is, and one of the points that I think that Goldman Sachs and even BlackRock is not looking at. Now, obviously, they have a bunch of letters and numbers behind their names that, I don't, and they get paid a lot more than me to talk about this stuff. But if we look at things historically, right, there's a lot of worry about a recession. We hear talks about soft landings, hard landings. The Fed doesn't know what they're doing. They're going to crash the market. They're going to put us into a recession. Yet last month, we saw an increase of job growth of around 500,000, over 500,000, when the expectation was only 187K. That is insane. All the while, we are seeing inflation drop. CPI numbers were down yet again, and they have been coming down since July of last year. So I think that there is the possibility of a soft landing. I don't think we can rule that out. Should we rule out a recession? No. And I've talked about this, that I don't think that we should rule that out at all. I don't think it's going to be a 2008 or even a 2000 to 2001 type of recession. I think it could be very mild if there's one at all. And right now, it doesn't seem as if we're going to see much of one. Now, there are factors out there, things that we probably should concern ourselves with, right? Like the highest credit balance that we've seen in the history of our economy, more credit card balances than we've ever seen, or higher credit card balance than we've ever seen, 950 billion, I believe, in credit card balances. And that is something to certainly be concerned about. We are seeing job cuts at everywhere, but particularly within tech. And this makes sense because of the demand that we saw over COVID. A lot of tech companies overhired. I mean, let's not look any further than Amazon, who's laid off a ton of employees based off of their the demand that they're seeing or lack thereof. So I think that there are some pockets in which some may feel recessionary pressures more than others. We're also seeing food prices come down finally as well. So that's something to also consider. The only thing that worries me that potentially could put everybody in the recession camp is oil prices. And I talked about this within my Chaos Crew folks over at patreon.com/ownthechaos. Make sure you go check that out. Link is in the description. And I had mentioned that the SPR is no longer here to save us. And we are going to continue to see strong demand for energy. If jobs are going up, they're continuing to go up. As I'd mentioned, over 500,000 jobs added in January when the expectation was way less than half that, about a third of that. Then you're going to see more demand for oil. You're going to see higher demand for gas, for natural gas. You're going to see it globally as well. China has now finally gotten rid of their zero COVID policy. I think that that's going to continue to be a thing. So that increases demand for oil as well. I like the oil plays still. I like energy in general. We have Enphase that's going to be reporting earnings this Tuesday, which you guys may want to hit that notification bell for. I'll be live to react to those earnings as they come in at 3:45 p.m. Eastern time tomorrow afternoon. So make sure you guys are checking that out. I like Enphase. Enphase is growing 60% quarter over quarter in Europe right now to mitigate some of the supply chain issues that they're having regarding energy. And that's going to continue to be a theme. I'm excited for Enphase's earnings this week. I also think that energy in general, your Exxon's, Chevron's, natural gas, oil, that's all going to continue to go up as well. Because the Strategic Petroleum Reserve was a Band-Aid. It always was a Band-Aid, and now it's no longer an option, at least for now. So that's something that I think could be worrisome. But one last thing that I wanted to point out, I still think that we are poised to be bullish for the rest of the year. And I still think that 15 to 20% move in the S&P 500 could be a possibility. So let's take a look at the chart here. So this is the weekly chart on the S&P 500, the SPY ETF. And you can see what I'm seeing, right? I mean, you don't have to be a chartist to really understand what's happening here. And it's a break in the trend. We've been seeing the S&P 500 downtrend virtually since the beginning of 2021, and it's been downtrending for the last year and 1 month, up until recently, up until 2 weeks ago. We started to see a break in this downtrend. And again, this is a weekly chart. So each one of these candles represents 1 week in the stock market. And we've seen a significant move to the upside. The bottom was clearly in October. And if you had bought back in October, you'd be doing quite well. October, the S&P was sitting, or the SPY was sitting at 350. And now we're up to 412. Not a great day today, but I don't think any of this is going to be linear. Again, we saw a huge move in the market, up 7% in January alone. And I think that this is going to continue to be a theme, but it doesn't mean that it's going to go straight up for the rest of the year. We're going to see some rockiness. We're going to see some pullbacks or what have you. So just like it was on the way down, right? It didn't go straight down. It took over a year to get to where it finally bottomed out from 472 all the way down to 350. That's a significant move down. So I think that it's going to resemble somewhat of what the downtrend was. I think we could start to finally get bullish on the market overall. Historically, you look at 2008, the recession that took place then, stock market crashed in 2008. Everybody felt it in 2009, but yet there was a 20% increase in the S&P 500 in 2009. Same thing happened back during the dot-com bubble as well. So I think that this is textbook move here on the SPY, on the S&P 500. Qs probably will end up being the same way. Here's the Qs right now. And that is also in the middle of a trend change. So downtrending since November of 21. And so I like this a lot. I think that there's a lot to like here for the Qs as well. I mean, we saw Apple, right? As I'd mentioned, Apple missed earnings for the first time in 7 years on Thursday after hours of last week. Yet Friday, it had a hell of a day. It was up 3.5% on Friday. Or I'm sorry, 2.5% on Friday. It's down 1% now, but it's not anywhere near giving back any of those gains that it's had since October. So I don't think there's a whole lot to worry about here. And I actually like going long on the overall market. But let me know what you guys think in the comments later on. You guys are chiming in on the poll here, and it looks as if it's still very much a mixed bag, but most of you are saying that the stock market will be flat from here on out. So most of you are in the camp of Goldman Sachs, which is very interesting to see. Very interesting to see. Make sure you're hitting that thumbs up if you're liking the stream so far. I certainly would appreciate it. And I want to see. Okay. Just wanted to check in on some things. So let's go ahead and get into our next. So one of the things that I wanted to kind of bring to the morning show, and we'll figure this out, right? Like, this is me just experimenting, and I appreciate you guys watching and liking and enjoying the show so far. And we'll figure out the channel members thing as well. Not saying that this is going to stay forever, but just kind of, again, trying to figure out how to increase more engagement and seeing how you guys like it so far. So if you're watching this at a later date, make sure you hit me up in the comments or hit me up over on Twitter at OwnTheChaos. Let me know how you're liking the stream in the mornings. Do you want me to continue to do this? My plan is to actually go live in the mornings and then also still do my afternoon streams as well, pepper in some pre-recorded content, and just be the best creator that I can be for you guys. So hit that thumbs up if you're enjoying the morning stream so far, if you want to see more of this moving forward. Okay, so I wanted to make this a little bit fun. I did implement this over at DCTV. I thought it would be fun to do here in the mornings as well. And that is what we called the WTF news of the day. It could be the odd news of the day. I haven't quite figured out exactly what I'm going to bring to the table as far as this is concerned, but I thought this was interesting. This is it's never going to be related to the stock market, most likely, but I just thought, hey, let's break it up. Let's not be so boring and talk about some fun stuff that's going on in the world right now. And so this was an interesting story. A Michigan man says that his 6-year-old son ordered $1,000 in food from Grubhub. Let me know if this has happened to you before, but here's what took place. Michigan man said he was left with a $1,000 bill after his 6-year-old son ordered a virtual smorgasbord of food from several restaurants last week, leading to a string of unexpected deliveries, maybe starring in an ad roll campaign. Maybe has a starring role in an ad campaign. Sorry. Keith Stonehouse said the food piled out quickly in his Detroit area home Saturday night after he let his son, Mason, use his cell phone to play a game before bed. He said the youngster instead used his father's Grubhub account to order food from one restaurant after another. The boy's mother, Kristen Stonehouse, told Associated Press on Thursday that Grubhub has reached out to the family and offered them a $1,000 gift card. The company is also considering using the family in an online promotional campaign. She said Grubhub officials did not immediately respond to a message from the Associated Press, but I'm sure that we'll hear from them soon. Keith Stonehouse said he was alone with his son while his wife was at the movies, and Mason ordered jumbo shrimp salads, shawarma, and chicken pita sandwiches, chili cheese fries, and other foods from that one Grubhub driver after another delivered to their Chesterfield Township home. Keith Stonehouse said it was just like something out of a Saturday Night Live skit. He added that I don't really find it funny yet, but I can laugh with people a little bit. It's a lot of money, and it kind of came out of nowhere. Can you imagine? And let me know in the comments as well what you guys think about this. But I'm sure there's a lot of parents out here that are watching me right now. I don't doubt that some of you have probably let your kids use your phones, your iPads, whatever. Have they ever done anything crazy? I remember when I was a kid, my parents told me at one point when I was a kid, I was a toddler, I guess, I called 911, right? I feel like that's a pretty common thing to happen. Kids just get a hold of a phone, and that's what ends up happening. That's like the first thing that you see them do, right? But ordering $1,000 in Grubhub or DoorDash or whatever, has this ever happened to you? Let me know in the comments. Give me a story. Would love to hear from you guys. There's got to be other crazy stories out there. Maybe not $1,000 bill, but that's pretty nuts. That's pretty nuts. Anton Sigursky, it's good since we don't get the watch list anymore. Anton, I appreciate you putting that comment in there. Yeah, so I used to do a daily watch list. Just ended up being that it just became too overwhelming, especially since Fat Man Zoom was no longer part of the show. And so I'm just trying to shake some things up to make sure that I can make sure that I can make commitments to that. So appreciate the feedback on that, Anton. But the watch list there is a watch list that you can go check out over at patreon.com/ownthechaos. So yes, appreciate that feedback on that as well, Anton. So let's go ahead and get into some of the earnings reactions as well. We got about 11 minutes before the market opens, and we have onsemi, Cummins, as well as Tyson Foods. So let's go ahead and check out Tyson Foods first. So here's your chart on Tyson Foods. Let's go to the 5-minute here so we can kind of see the immediate reaction. That stock's down 5 1/3%, and it has been very interesting to kind of watch this one move here this morning. So Tyson Foods came in. They missed. They came with Q1 non-GAAP earnings per share of 85 cents. They missed by 52 cents. That was quite a bad miss. Revenue came in at $13.26 billion. That's also a miss. They only grew that revenue 2.6% year over year. They missed by $250 million on the estimate for fiscal year 2023. The company reaffirms sales to be 55 to 57 versus the consensus of 55. So on the high side there, but capital expenditures of approximately $2.5 billion. Tax rate to be around 23%. Total company GAAP operating margins of 3.5%. Adjusted operating margins of non-GAAP of 3.4%. Man, those operating margins are just razor thin. Repurchased 4.9 million shares for $313 million and liquidity of $2.9 billion at December 31st. Shares, as I mentioned, are down 5 1/3% right now. They came out and said, quote, we executed our strategy in Q1, growing volume, improving staffing levels, investing in automation, and building inventory to meet customer demand, all while maintaining a focus in liquidity and financial health. This is from Tyson Foods President and CEO Donnie King. Really? Don King is their CEO? The strength of our retail brands, including Tyson, Jimmy Dean, Hillshire Farm, and Ballpark, was demonstrated by the growth of prepared foods, most notably with Jimmy Dean ending the quarter as all-time highest volume share. Our advantage brands and advantage categories uniquely position us to win in the marketplace. Yet, they've seen a significant slowdown, which is interesting, right? Because we've seen that food has had so much pricing power, yet somehow Tyson Foods was unable to meet expectations. The stock's down 5%. I think that this is a bit of an overreaction. $60.81 is where we're sitting at right now. The low, the 52-week low, is at $59.38. So I think that being $1 off from its 52-week low could present itself an opportunity if we do see some sort of bounce there. I think that a 5% move down is more than likely an overreaction to these earnings. So I think that there's probably some opportunity here. As the market opens, we, of course, revisit this one, and I think that we probably could see a decent pop on this. The next one's going to be onsemi. They came in and actually beat earnings per share, and this is exactly why you don't want to trade earnings just expecting a beat in the stock to go up. Stock right now is down 3.5%. onsemi released had a press release. The non-GAAP earnings per share of $1.32 beat consensus by 6 cents. Revenue came in at $2.1 billion, 13.5% growth year over year. They beat that expectation by 20 mil. Q1 outlook, revenue at the range of $1.87 billion to $1.97 versus a consensus of 2. So that's why the stock is down. We were expecting $2 billion revenue, and they only came in 1.87 to 1.97. Adjusted earnings per share in the range of $1.02 to $1.14. The consensus there was $1.14. So pretty much on the low side of that as well. I think that onsemi, it kind of falls along with the theme for most semiconductors this year so far. I'm not expecting anything crazy from the semiconductor space unless your name is AMD or NVIDIA. I think that probably continues, but yeah, that is your move there on semi. Where can we see this go from here? I think let's come back out to the daily chart and just kind of see where we're at. You know, with us being down 3.7%, sitting at $77, I think 76 could be that next spot that we watch for. Again, this is your daily chart. Here's $76. That's going to be your first stop. But it's been on a decent breakout, right? I mean, this is a nice little cup and handle that we've seen out of onsemi. So it still looks relatively bullish. I think that there's certainly some opportunity here for sure. Especially if it comes and tests that $76, $75 area. Watch for that to move up if we see anything. But, you know, that guidance certainly coming in lighter than expectations is what's influencing the stock here to move down. And then we have a bright spot, and that's Cummins this morning. So Cummins is actually done really well, and their earnings are also reflecting that. They've had a monster quarter here. They came in $4.52, which is in line with expectations. But the real story here is the revenue growth. Revenue of $7.8 billion. That's a 32.2% year-over-year growth and beat expectations by $500 million. Over $500 million. $590 million is what they beat the expectations by. EBITDA in the fourth quarter was 14.2% of sales. The company expects full year 2023 revenues to be up 12 to 17% versus the estimated growth of 11. So smashing those expectations. Within the components of segment, Cummins is expected revenues of the Meritor business for 2023 to be $4.5 to $4.7 billion. EBITDA to be in the range of 10.3 to 11. The electric powertrain portion of Meritor business has been integrated within the New Power portfolio. Their expected loss for now at $55 million. Nobody was surprised by that. The company plans to continue to generate strong operating cash flow and returns for shareholders and is committed to our long-term strategic goal of returning 50% of operating cash flow back to shareholders. That would be nuts. That would be really good stuff from the Ohio-based company. So revenues, again, in the fourth quarter, $7.8 billion, and they crushed earnings per share, $4.52. That's pretty damn good. So one of the bright spots here this morning on earnings. And as you guys might know, if you've been following me for any length of time, I do react to earnings on every day. So I've seen some really good success from earnings reactions in the afternoon, and I figured, hey, why not react to them in the morning? And so that's why I'm here this morning. If you guys are wondering what the heck's going on with Own the Chaos, that's what's happening. The afternoons aren't going away whatsoever. In fact, I'm just adding another live stream to my very busy day. So make sure you hit that like button if you're enjoying the stream so far. I actually ended up putting in the poll here where you guys expected to see the S&P 500 by the end of the year. And still, this is an amazing, this is probably the tightest poll that I have put up. So 25% of you, you've got about 48 votes. 25% of you say 10%. The stock market's going to be up by 10%. 23% say it's going to be up by 15%. And 30% of you think it's going to be flat. So still the majority there. And then 23% are thinking negative. So the conclusion here is that nobody has any idea where the market's going to be by the end of the year. So let that be a lesson to you guys. Nobody can accurately predict the market. But that's by far the closest poll that I've ever put up, I think. With that many people already chiming in and so many different answers, that's pretty crazy. Again, if you guys are enjoying the show so far, make sure you hit that thumbs up. I certainly would appreciate it. For this being my first morning show, I think it's pretty awesome, and I'm having some fun. So make sure you guys hit that thumbs up. If you want to be a part of the show, make sure you hit that join button next to subscribe. For $5, you get to chat with me in the mornings. That's how I'm choosing to structure it for now. And if you guys want to continue to hang out with me in the live stream and interact with me, make sure you hit that join button to help support the channel in that way. Would love to have you guys as a part of the show. Okay, so moving on, I wanted to talk a little bit about Tesla as well. So Tesla has been on absolute fire, without question. Let's take a look at the chart here. So this has been wild. Again, this is your weekly chart. Huge move over the 200-week moving average. It wasn't looking great as it was falling below that 200-week moving average. But now we're starting to see Tesla really make some interesting strides, right? I mean, they came in, smashed earnings, and the stock's been continuing to move quite significantly. Yeah, no problem, Anton. Thank you, my man. Appreciate you. Appreciate you hanging out. So year to date, Tesla is up 75%. Sitting at 193 here in pre-market, it's up 1.71%. Over the last 52 weeks, it's still down 36%. So, obviously consider that, but the 75% move here is extraordinary. And I think that there's potential that this can continue to go up, even though I think it's expensive. And nobody's going to argue the fact that this is expensive, right? But is it worth the premium? It's got a forward PE of 40, we'll call it 48 times next year's earnings. That is quite insane. But we look at some things that are happening with Tesla, and Wedbush comes out this morning, talks about another reason why you should be bullish on Tesla, and gives a $225 price target. We're not too far off from that at this point, but Dan Ives, as many of you guys know, huge Tesla bull, says that based on the firm's recent survey work in the field, the expectation is that China electric vehicles reacceleration story for Tesla was just starting to hit its stride. While China demand was a headwind for Tesla in Q4 with the lockdown and macro uncertainty, we're now seeing a noticeable turnaround for Chinese EV buyers, favoring Tesla versus its domestic players BYD, NIO, and XPeng. The price cuts have swayed 3 of every 4 EV buyers in China. That is very interesting. Based on their survey work in China, and Tesla's unmatched ability to scale its production in operations in China are meaningful to margin stability, which are front and center for the street. The Wedbush view is also supported by most recent sale deliveries reports out of China, and Wedbush thinks that production and demand out of US and China, Tesla is on an early path to exceed the expectations that it will deliver 1.8 million vehicles in 2023. Now, this is very interesting because I had mentioned And as we're now at the open, the bell's finally rung. Market's officially open. This is your let's go to the 5-minute chart just to kind of see the initial reaction here. So a huge bump. Looks like we're about maybe ready to break the pre-market highs. Came up and tested that pre-market high, and it is now busting through. So stock's now up almost 3% on this upgrade from Wedbush. I mentioned during our reaction to Tesla's earnings that I thought that potentially we could see, I don't know, 1.8 million vehicles seem to be ambitious. And we've seen Elon Musk make ambitious claims before, right? I mean, the Cybertruck was supposed to be out 18 months ago, 2 years ago, right? We were supposed to see that. The Tesla semi trucks finally came out, the end of this year. And I think that was just to make the claim that they were actually released in 2022. But those got pushed back several times. Full self-driving, robo-taxis, all this stuff. So I was, not only that, but Elon made claims in 2021 that the Model Y would be the number one selling vehicle in the world. That's surpassing the Toyota Corolla, which is, I just don't know when they catch up to that. So, making some pretty bold claims. Sometimes he follows through with them. Sometimes he doesn't. Tesla's still rolling here, by the way. It's up now over 3%. So, is there an argument to be made here? Is there some good reason to be bullish on Tesla, even though it's already up 75%? Now, listen, we've already seen Tesla make some insane moves. And even Elon comes out and to the point to where Elon has come out in the past to say the stock price was too high, right? There's a couple of good things too. The SEC trial based off of, or the class action trial, whatever it was, he ended up winning that over the weekend too. Another good reason why the stock's probably up. Now it's up 4%. Looks like we're trying to break over that $200 mark on Tesla. Would I buy this here? Hell no. I just wouldn't. I would wait for some sort of pullback. Again, we're up now 80% since the beginning of the year on Tesla. And we come back out to the daily chart, and it's up even more than that. Oh, no, I'm sorry. The bottom was the beginning of the year. So since the bottom of this year, which was January 6th, essentially the first couple of days of trading this year, stock's up 75%. I just don't see how this makes any sense. It was oversold, no question. I would have bought it at $100 easily. No big deal there. But now at 196, just 30 days, 30 calendar days from now, not even 30 trading days, 30 calendar days from now, from then, no. I'm not about that. It is way off of its all-time highs, which were sitting at $414.50. So one might be able to make the argument that it's got room to run, but it was so ridiculously overvalued at $414. And this was before we saw a million cars sold, million units sold. So to me, I think that there is reason to just kind of avoid Tesla for now. It defies a lot of things, just to be clear. So I'm not saying that it won't go up, but I think the risk of this going lower is much greater than it going up. I think the probability of it going lower is probably much higher than it going up. So I would probably just avoid this for now and see where there's other opportunities, because I think there are. Checking in with Tyson Foods, they ended up missing earnings per share, missing on revenue, didn't come in with a great outlook either. Stocks still remaining down 5%. I still think this is an overreaction, but we'll see how this shakes out for the rest of the day. Apple also making a move down in pre-market, but remaining flat since the open. We saw a brief sell-off, and it looks like it's trying to claw its way back. Looking at the S&P 500 overall, it's actually getting bought up here after the open. So very interesting to see that. We come back out to that daily chart, and you can see that that trend break is still very much in play. Sorry, this is a weekly chart. Weekly chart's pretty much on par here. So that bust out over the 50-week moving average is certainly significant, and now the official trend change is worth noting. And we come out to the daily, you can see the same thing. The 200-day, some would argue that this 200-day moving average crossing over the 50 isn't good. But that 50-day, I mean, just a really, really interesting spot for this on the daily chart. I think the better broad picture to look at here is on that weekly. That to me is very significant. What's up, Philip Stroh? I see you there, man. Appreciate you hanging out this morning. If you guys are enjoying the stream so far, make sure you hit that like button. Certainly would appreciate it. And yeah, let's go ahead and take a look at some of the other earnings that we were looking at. Interesting to see that Cummins has actually ended up turning down. It was green this morning on some really good earnings and a really solid beat, really good guidance, yet the stock is red. I think that probably represents a pretty decent opportunity for Cummins. We look at, looks like it's sitting at support right now at 254. We'll see if that holds. A couple of things that we want to look forward to this week. Enphase, as I'd mentioned at the top of the show, they're going to have earnings tomorrow after hours. So make sure you guys are liking, subscribing, and hitting that notification bell to get notified when I go live at 3:45 p.m. Eastern time. I'm going to react to these earnings as well as Chipotle will also have earnings tomorrow. And that stock has been on fire, on absolute fire since the beginning of the year as well. People want to talk about Tesla being on fire. Chipotle is the same thing. And Chipotle, I can make the argument, has room to run. I would buy Chipotle over Tesla right now, period. I think there's less risk in buying Chipotle right now than there is Tesla. That stock's up 23% since the beginning of the year, but you can see that and here's the reason why, right? Chipotle just hired just announced they're hiring 15,000 new employees in a time where people are screaming recession. We're seeing a bunch of layoffs everywhere, but consumer spending is still quite strong. And Chipotle's out here still hiring people when we're seeing layoffs everywhere else. To me, when everybody's going left, Chipotle's going right, and I think that they're doing quite well. This is also an expensive stock, but I think the premium is worth it. One of the very few companies in the food industry that is seeing the type of growth that they are, and I think that deserves the premium. We look at revenue growth here, and it is 17% year over year. We look at something like McDonald's, and then that's actually in a negative. So that's something to really kind of consider. Chipotle is still rocking. Okay, so let's take a look real quick back at Tesla. A little bit of a pullback, giving back some of those gains. Come back to the 5-minute chart. Just take a look here. Yeah, so giving back those gains so far in the morning sesh. Let's look at Apple. Just kind of want to see that. Yeah, that sell-off is continuing. It looks like the SPY is also trying to come down here along with the Qs. So everything's kind of moving down a little bit here after the initial pop after the bell. And we'll see how the rest of the day looks. So I'll be back here at 3:45 p.m. Eastern time today. We're going to be reacting to some earnings this afternoon as well. So this afternoon, we have Pinterest, Activision, Take-Two, Skyworks, Spirit, Simon Properties, and Chegg all report earnings this afternoon. So make sure you guys are tuning in again at 3:45 p.m. Eastern time. Hit that like button if you guys enjoyed today's stream. And if you want to see more of this in the mornings as well. And that's going to do it for today's show. I also like to implement birthdays. So if you guys were part of the DC TV crew, I always shouted out the birthdays at the end of the show. So we're going to do it today. Rick Astley is 56. Still never going to let you down. Axl Rose is 60. Brian Stepanek, the actor, is 51. Bob Marley, his birthday is today. He would have been 78. Charlie Heaton is also 28. And let's not forget about adult film star Daisy Marie, who's 39 years old. She was the star of the Bad Wives book club. I've never done this before. 8, hauling ass. I liked the girl and I liked it. And my favorite, Silence of the Clams. Guys, thanks so much for tuning in. I'll see you this afternoon.